Hey everyone, and welcome to this month's Austin Metro Rental Statistics Update. My name is Adrienne Laosa, and I am the managing partner of Treaty Oak Property Management here in Austin, Texas. This month, we are going to break down the key trends in leasing activity, pricing, and market conditions to help you stay ahead in the rental space. Let's start with an overview of February 2025 market stats. For single family rentals, we had some interesting shifts. Unfortunately, total leases dropped by 7.7% year over year, showing a slight dip in tenant demand. This is seasonal, by the way. This happens every January and February. This is when we see rental demand at its lowest. And so keep in mind that we are stepping into March right now. And so we should be seeing rental rates start to kick up. New lease listings were down only 1.71%, which means inventory has remained stable during these months, which tends to be the same year over year as well. Rental prices are softening a little bit. The average rent is down 2.26%. This has been something that we've been tracking really since 2022. Rents down 2.26% to 2514, and the median price is down 2.2% to 2,200. Days on market are up to 52 days, meaning homes are taking slightly longer to lease. Let's move over to the duplexes. The changes are a little more pronounced here. Total leases fell by about 11%, signaling a sharper decline in demand during February. New listings jumped to 14.22%. So we've got a lot of owners who are prepping themselves for the spring season. Landlords will face competition with a lot of inventory on the market for duplexes. Average and median rents declined by about 3%, close to what we saw with the single families. Days on market increased by 23.5%. We are now at 63 days, average days on market for duplexes. There's a lot of inventory out there. And of course, the duplex statistics do show more of what we might run into with true investors, as well as challenges facing the surplus of inventory on the market, as we see with lots of apartments and condos. So duplexes kind of fall into that mix as well. 12 months Austin Metro average price and median price. Let's take a look at leasing trends over the past year and how seasonality is impacting the market. This is a really interesting slide. Looking at this chart, we see a clear seasonal pattern. Leasing volume peaked in May 2024 over, oh, I'm on the wrong slide. Let's go back to this one. Here we go. Leasing volume peaked May 2024 with over 3,120 leased units, which aligns with Austin's busiest rental season. We are going to see this every year. Then, as expected, activity declined in the second half of the year, bottoming out in December 2024 before rebounding slightly in January and February 2025. New listings followed a similar curve, peaking in July 2024 at 2123 new listings as property turnover increased. Feb 2025, we're seeing 1666 new listings and 1397 lease units, which means inventory is building slightly as we move into the spring market. If you have a vacant property now is the time to position it competitively. This is the conversation that we are having with all of our clients right now at Treaty Oak. Price it competitively. The spring and summer months will bring increased demand, as always. So make sure that rentals stand out with strong marketing, and the right pricing is key. We can also talk about currently occupied units, right? We want those tenants to stay in place. Please focus on tenant retention. It is not worth losing a tenant over a $50 to $100 a month rental increase. Vacancy is very long, 63 days on market for duplexes. So let's try to keep tenants happy and in place and focus on your long game, which is appreciation, eliminating vacancy, protecting your asset, things of that nature. Now we can navigate back to the median price and average price slide. We can take a final look at these pricing trends over the past year and what landlords should expect to move forward. We saw both average and median rents peak in mid 2024, as they always do, hitting 2662 and 2350 respectively. Since then, we have had a steady cooling, which is typical for the winter months. By Feb 2025, the average price settled at 2514 and the median is at 2200. What does this mean? Rent growth has softened. Rental demand is still tracking upwards on a year over year scale. Not every single month though, but inventory. This is our supply and demand discussion, right? That we always want to touch on. Rent growth has softened. Demand is expected to rise heading into the warmer months. If you are a landlord, now is the time to prepare for leasing season, whether that means refreshing your property, reevaluating pricing, offering incentives to attract quality tenants. For our longer listings that were on the market, we occasionally offered move-in incentives like free rent for condos, apartments, things of that nature. So want to just recap quickly takeaways in this month's update. Leasing demand is picking back up after the seasonal winter slowdown. More available listings mean tenants have more decisions. Competitive pricing is crucial. Making sure that your property is ready, move-in ready is what we call it, right? Making sure that your property is move-in ready is crucial as well in order to eliminate vacancy. Please shift your focus to eliminating vacancy rather than chasing $50 to $100 extra per month. Let's get these units leased. Let's get them occupied with really well qualified tenants. And let's focus on increasing rents when the market goes up. As always, Treaty Oak Property Management is here to help you with pricing, strategy, marketing, and tenant placement. If you have any questions or need assistance, please don't hesitate to reach out. My name is Adrienne Leosa with Treaty Oak Property Management. Thank you so much. Have a great day.